All right. Welcome everyone to this call. This is what we call the Be Your Own Bank call. Some of you guys might have heard about this strategy before, this concept. I actually found out about this concept many years ago. I would say about 6 or 7 years ago. Never really understood it. Never really knew that it could be something that can be done. A lot of this strategy was actually introduced in the US. It was like a big thing in the US, and I thought it was just for Americans only. But believe it or not, here in Canada, or well, I'm here in Vegas right now, but in Canada, it's actually available for us. Many things with how the system is with the government and things like that is very different in the US than it is in Canada. But believe it or not, this system is available in Canada. It actually functions very, very similarly. And there's a lot of moving parts to it. When I was first introduced to this concept, I didn't really grasp it all that well. I thought you had to be super wealthy. I thought you had to make a lot of money to be able to start utilizing this system. But more and more I talk to advisors, people that are in this industry, including Jasmine, the more I realize that, hey, you can start with this. Anybody can start with this at any level of income as long as you have decent cash flow. And this is why this is step two inside our community and as a strategy where once you've reached a point where you're cash flowing, right? All your bills are paid, your income over exceeds your expenses every month in a good sense, then you can dive into something like this. There's a lot of different types of investment vehicles out there. And, I've done a lot of things. I've been in crypto, I've done Forex trading, things like that. So I'm very well versed in this realm of, investments, passive or active. But there's nothing more powerful than actually having your money work for you in a system where it can grow tax-free. And not only that, your every dollar contributed here can actually work for you up to two times or even three times leverage, depending on how you utilize this. But I don't want to take away too much of the technical parts and how all this works. That's why I've got the professional here, Jasmine. I've known her for a few years now. She's very well versed in this space. She's been in the space for probably over a decade now, I'm guessing. Yeah. So without further ado, I don't want to take away her expertise. I'm gonna let her explain to you guys this concept, how it all works, why I believe true-heartedly that this can work really well within our community, and in terms of building wealth, right? Because my story is that I've made a lot of money in my 10, 12 years in network marketing, affiliate marketing, things like that. And I've hit a lot of roadblocks. This is being very transparent, very honest. I wish I was smarter with my money. I've made millions of dollars and I've also lost millions of dollars as well. Having gone through that and not building a true asset for myself where I can actually still build wealth in the background. I really started geeking out over this and I really love this concept. So, for all you guys here, you guys get to learn from my mistakes. Like I said, I've made a lot of money, lost a lot of money, and I wish I had started sooner with something like this. So without further ado, Jasmine, take it away. Maybe tell the audience a little bit about how you are, what you do. I'll unmute you as well, and then we'll go from there.
Okay. I've been now in the wait 1 second, let me my okay, there we go. I've been now in the industry for 18 years. AJ, you were like, it's crazy because I think about it and it's now been in the industry for 18 years, about eight in the banking world. Did credit a lot of that stuff and then kind of transitioned. And to tell you the truth, just this concept as well. I learned it more when I started to look into wealth and how people became wealthy. And in the very first stages of it, it's the same as you. It's like it can't be true. It can't be something that, how can we not know about it? What we'll kind of go through today, and I think it's just because the marketplace make it seem so complicated. Exactly what you said. We used to think of it as something for the wealthy, the super wealthy, the ones that have millions of dollars or trust fund babies. I used to think about it that way. But then as I looked into it more, I realized that it is very important for even the ones that just have $200, $300 a month left and really be able to start to look into generational wealth. So my job today, I've been now in the industry for 18 years, but I've also trained about hundreds of associates both in Canada and the United States. Today, we're going to focus on the Canadian side, but if there's anyone that has questions in the United States side, they're fairly similar. There's just one product that's a little bit different in the United States. Just because of the tax laws there and the types of products that they have available. So we'll kind of go into it. My job is to make it as simple as possible and leave some of the questions for you guys in the end. And I'll kind of give you guys some examples, actual examples of how families have used it. The great thing about your guys' opportunity, AJ, is you can make a lot of money really quick. When I sit down with families, it's something that we worked our way into after maybe 5 years, 10 years time, because we have to pay off the debt and, their employees working 9 to 5 jobs. So it's not something that they could just turn on a switch and have make $100,000 in 1 month, which is, I think, is crazy that you guys are able to do that in this opportunity. And a lot of people still, at this point, though, I have a lot of clients that have set this up a long time ago and is now on the second stage of it where they're accessing it, being able to really grow their wealth. So I hope to be able to answer some of your questions, be able to show you what it really does, but also understand really what it's kind of doing for us. So I'm going to share my screen for you guys, but to understand the how a lot of finances work in Canada and just in general. So I'm going to be sharing my screen here. I'm going to give you guys an example. And infinite banking has been something that has been around for a really long time already. It has, I'll show you families that have used it in the 1800s and what that's done for them, the last and the second stages, the last stages of their life, and how that's kind of really transformed generations. But it didn't used to be called infinite banking. It just used to be called cash value life insurance. That's just really what it was called. And as people start to really realize how it's used and how it can really quadruple your wealth, as you kind of said, AJ, and how you can move money from this asset to another asset, hopefully I'm able to make it simple for you guys. But to start off, there are stages of wealth, and a lot of us and a lot of people are kind of in a couple of different stages. The first stage is the accumulation and the growth stage. That's when we're making money, saving money, whatever opportunity we kind of have, you're just making as much money as you can. The second stage of it is accessing it when we use it. When we start to use that money, whatever it is, for travel, for buying our cars, buying our houses. And then the last stage, if you do everything properly, is hopefully you get to transfer that to the next generation. Throughout all of the stages of wealth, what needs to really happen is we need to protect that wealth, whether it's through taxes, whether it's because of inflation. To me, my favorite thing to do is to protect it from taxes, because based on history, taxes just keep going up and up and up year over year. So that's really one of some of the things that we do. But now there used to be different tools for different things. But what if there was a tool that can do it all? We need to this is where we're going to start off in understanding the banking system. If I was to purchase something that was huge, like a house, a car, maybe to buy a trip, then there's a couple of different things that we do. Maybe we save money in the banks and we take it out, we finance it, or we put it in our credit cards. I'm going to actually switch screens here a little bit. I'm going to share my screen from there's a lot of different ways that I kind of do this, AJ, and I find that I used to have slides for it for this part of it, or I would used to have like even videos for it. But whenever I draw this is when people retain the information more. So I'll kind of draw it for you. When people make money, I'm going to just stop this share and then I'm going to share my other screen for my iPad here. 1 second. There you go. Okay. So when people make money, most of the time, there's a couple of different things that happen. There's a baseline that we all call, and the baseline here is, let's just say, that zero line. That's kind of the baseline. And for a lot of people, when we're looking at big purchases, there's a couple of ways that people would do it, that families would do it. We would either start to save money, say like 500, 1,000, $10,000 a month. Once we finally saved money, then we'll kind of drop down and use it. That's kind of like what most people would do. And then we'll go back into the same cycle. We'll save money, maybe for a McLaren. and then we'll save it. So I was like, how much money do I have to save to get a McLaren?
That's a good one.
Um, and then use it, right? So then every single time you kind of save, you go back to zero, save and go back to zero. And this is where most families, hopefully, where most families are at, right? You save and then you go back to zero. So that's kind of really where a lot of families are. And then there's the other type of families where they actually go on the other side of the zero, where towards the bottom, where they actually borrow money. So they would borrow money. Think buying a car, of $50,000 of debt. So you'll buy a car for 50,000 and then you'll pay it off, right? You'll pay that off. So people will go into debt and pay off cycles. And then the same thing. I have a lot of family members that once they're paid off one car, they'll buy another car, a new car after 4 years, after 6 years, whatever that is. They'll debt and then they'll pay this off. So the same cycle. For a lot of people. So you just kind of go through that in our lifetime. We go through these cycles over and over again. The challenge for that is we never know where we really kind of end. And every time we do this, we interrupt something that was super important, which is compound interest. It doesn't allow for money to continuously grow because we keep interrupting it. And at some point, what we just decide to do is, okay, I'm going to stop getting myself into debt. There's not going to be any more debt. I'm going to stop myself getting into debt. And hopefully you start kind of now just accumulating wealth as much as you can. But at a certain point in your life, you're still going to need to access that through retirement. So you're still going to need to kind of go back down here. Where a lot of people have a little bit of a challenge is, where do they stop? Because they want to be able to transfer some money and inheritance to the next generation. And that's really where infinite banking kind of comes in. So in form of a diagram that will kind of show you what it kind of looks like, the infinite banking concept that I'm going to be showing you guys today, which I'll show you in actual examples, is you save money, you kind of start to save. I can't draw anymore. It's the stairs. You save money, and then now you access this money over here. Maybe you have $100,000 at a certain point, but then now this money kind of stays intact and the money still continues to compound over time. It'll continue to grow, and then you can access the money over here, whatever the difference is. You can decide to pay it back, or you don't have to pay it back. Your death will kind of pay it back. So then you just continue to do that. And the difference is, over a 30-year period, a 15-year period, or a longer timeline, it's obviously going to start to really increase and you really see the difference. But not only that, you leave a pretty big inheritance to the next generation as well, which I think for a lot of people that have children or want to leave that to the next generation, that's probably one of the most important things too. So kind of the easier way for us to be able to see and what it really is actually called, the modern times have called it a properly structured cash value life insurance. That's really just what it is, or infinite banking concept. The infinite banking concept can apply to every single individual that we have seen today. And really, as long as you have a little bit of money left, I think the questions that we have here is, what type of cash value life insurance? There's two types of cash value life insurance. There's one that's universal life and one that's whole life. To put it very simply, all of the money that's being invested in putting into an account every single month is going into, there's a death benefit that's attached to it, which really increases wealth and your net worth instantaneously. I'll kind of show you that in some of the examples later. The difference of a universal life is it tracks the market. It's not actually in the market, but it tracks the market. What a lot of people, whenever we invest money in here, it goes up and down, it gets invested. So there's that choice of it. For the older infinite banking concepts, they used to use what's called a whole life policy. A whole life policy just continues to grow over time. There's no up and downs, just like the stock market. It's dividends that has ranged between 6% to 6.5%. Over the past 30 years, dividends haven't really changed. For a lot of families and corporations and individuals that are just saying that, hey, I don't really know when I'm going to access this. I want to make sure that at the time that I access it, the money's not, the economy's not crashed, or there's no tariff that's happening, or taxes hasn't really increased. I just want to have that stable increase over time and have access to it at a certain point. So infinite banking concept or the cash value life insurance, as a lot of people would see it, it does a lot of different things. It's called the Swiss Army knife of financial services. Number one, it increases your net worth instantly. If I buy $1 million of permanent coverage, your net worth overnight increases by $1 million. It's the only tool that can do that. Secondly, is it protects wealth in all stages. It grows your wealth. It allows you to access money tax shelter. It allows uninterrupted compounding even when it's accessed. It bypasses probate and estate, which really means at the time of death of any of the individuals that own it, it gets transferred uh, to your beneficiaries within the next 3 to 5 days, at most 5 to 10 business days. If the wealth and the money was stuck in an estate, it would probably take about 18 to 24 months, right? A year and a half to 2 years. It allows growth in multiple financial vehicles. This is probably my favorite part of this thing. It allows growth in multiple vehicles simultaneously if you use it properly. And then last but not the least, it leaves inheritance to your children, all tax free. And the impact of taxes have gotten worse and worse over time, especially in terms of estate. I'm going to show you guys an actual example of what it looks like, what it actually looks like for both the universal life concept and the whole life concept. And then we can kind of open it up to some questions. The universal life, we're going to do an example of $500 a month. I have a family that says like, hey, you know what? I have about $125 a week that I can put aside towards this. I'm 35, 36 years old. I'm going to put this aside every single month. I don't really care for guarantees right now. I understand the market. Someone like AJ, a little bit more aggressive, has crypto, all of these different things. And he's like, I'm not going to touch this money. I actually just really need this to grow. I'm going to use it for something else in the future. I'm thinking of buying real estate in the future. I'm thinking of, doing some of the other things. So I'm going to put about 125, doesn't really notice it, put it aside towards that. And we kind of take a look at it now. The money continues to grow. It's about $6,000 a year, $500 a month. And where we're going to really pay attention to is this part that's accumulation fund. In this situation, we've projected it at 7%. A lot of different companies have different bonuses. This company has a specific bonus of 0.8. So we're going to be following this bonus of 0.8. And then what we're going to take a look at is now, let's say 15 years down the line, AJ is like, hey, I need access to that money. I'm going to be buying a house somewhere in Asia. Like, I need some money there. We're going to be taking some money here at year 15. At year 15, at this point, AJ, if you put in $6,000 a year over the last 15 years, you've put in about $90,000. 6,000 times 15 is $90,000 at that point. If we take a look here, the accumulation fund in this account is already at $110,000. We've already broken even. Not only that, because it is within a life insurance plan, instantly, if you get approved overnight, if anything was to happen, your heirs get about $500,000 of cash, of death benefit there. So now you have about $110,000 that's accumulating here. You're like, hey, Jasmine, I'm going to get about $80,000. I don't need all of it. It's not a lot of money that for me to buy a house in Asia at the moment. I'm going to get $80,000 out of it. If we compare it in something that is invested in in the bank or even in an investment company, this is where the big changes start to happen. This is where really you get to see this. Now 110,000, let's kind of, round this down just for easier math for us. If I take $80,000 out of $100,000, how much money would be left here? Or 110? That's just not. How much money would be left here? I'd be technically in a bank, I'd be left with 30,000 if I take out 70, right?
Yep.
And unlimited banking is really where this kind of makes such a big difference. If I take out $70,000, what the company would do is they're going to say, hey, at some point, AJ, you're going to die. That's guaranteed. There's only two things that's guaranteed in life, which is death and taxes.
Yep.
At some point, you're going to die. So they're going to say, hey, AJ, I'm not going to take out the money yet. We're going to let this money compound here. We'll still give you your 70,000. We'll deposit that 80,000 deposit into your bank account, and we will just let this grow. We'll let this $110,000 grow here. if whether you surrender this policy, we'll deduct it at that point, or if you pass away, we'll deduct it from your death benefit. Now, if I had $30,000 growing at 7% versus $110,000 growing at 7%, I think you and I both don't need a calculator to know that $110,000 compounds more than $30,000 of here in terms of interest. So let's say now I've taken $70,000, $80,000 here at age 51, 15 years later. Now I'm age 60 and I say like, hey, I actually no, I'm gonna be retiring, or I'm not really, I need a little bit more access to some funds. Now the money's continuing to grow here. I've taken 70,000 here. I can continue to take money out here. The reason why
And
it's called an infinite
just to
bank is
pause,
because
yeah,
of
just to
that.
pause
Sorry,
you here,
go ahead,
Jasmine.
AJ.
Yeah, that sorry to interrupt. I think some people sometimes don't catch this spot. So when you contribute your $500 a month, $6,000 a year, it's always growing. It's growing at the rate of 7.8% in this example. Now, when at year 15, you have $110,000 that is available for you to pull from. Now, I think the part that, because when I first saw this concept, it wasn't made clear to me. So, what's really cool about this is that if you were saving this money on your own in the bank, let's say you accumulate $110,000. If you want to take 70 or $80,000, you're left with your 30 or 40K in the bank, and that's it. With this concept, what's really cool is that this money is still growing in there. So that 110,000 that's in there, when you take your 70 or $80,000 to invest in real estate, to buy something, whatever it might be, it doesn't matter what it is, you have access to that 70, $80,000. Okay. That 110 figure, guess what? Stays there. You do not lose that value of 110, and that continues to keep growing based on this schedule here. That is the power of that money. So think of it this way. You have 70 or $80,000 now in your bank to do whatever you want with that money. You have $110,000 that is continuing growing inside this policy. This is the power of this. Now, why is that possible? So I think Jasmine, I'll let you explain that. So a lot of people might be confused. Okay, if I'm taking 70, $80,000 out, how is it that the 110,000 is still sitting there and growing?
And continuing to grow. AJ, you kind of made a really good point there where there's some people that just use it for fun, right? But exactly what you said, if I was going to be putting it now in something like a real estate, like another property, then not only is it compounding here, there's one place it's compounding here, and there's another place that it's compounding here. You know
That's
what's really
correct.
cool that I've seen a lot of our clients do is not only is it compounding here, this house that they've bought is creating equity and it's compounding there, but also cash flowing.
That's
So then
correct.
now they've tripled their wealth overnight for what? 500 bucks a month that they've kind of put
Powerful.
aside. And the reason why, you exactly your question is the reason why they're able to do that is because there's a death benefit attached to it.
That's right.
Because they know that at some point they're going to pay this out. At some point you're going to die. That's just a guarantee for everyone. So they're putting a lien on your life. It's 50-50. There's people that, a lot of other families where they say, hey, you know what? I want to put this money back in here so then my heirs could have a bigger inheritance, then they could do that. Not they just deducted from this amount of money. This $623,000, they just deduct that from there. One of the more powerful things also that you were kind of saying is not only do you now you have money growing here, maybe most importantly, a cash flowing asset for most people that really want to quadruple their wealth. But as you continue to let it grow, now also the inheritance for your children or your next generation just continues to grow. It's the only tool that can do that and then it bypasses anything that the government can see, which is my favorite part. I am not afraid to pay my fair share of taxes. I enjoy the medical benefits. Actually, I really don't. I should go to the doctor a little bit more. But really seeing now the power of just that compounding effect. There's this $500 a year. This is a universal life. And to be very honest with you, AJ, I projected this at 7%. A universal life actually performs closer to 10 to 12%. For a
Yeah,
lot of
yeah.
people that are a little bit more aggressive, you'll probably see these funds more than double.
Yeah.
which is exciting. I've seen a lot of families retire at age 50, being able to do this and have done it in 20 years, started at 30. I've seen some of my clients retire at age 45 and just live off of, the infinite banking concept, as long as it was introduced to them early on. There's another here, another example that I'm just kind of showing you here as well, where instead of 500, we'll do $1,000 a month, 250 a week. Now it's 12,000 a year. If we really start to see this, it gets a little crazier. A lot crazier. You start to see, really the effects of compounding. Imagine what you could do, what asset you could buy with $200,000, what other business you can start, all of the other things that maybe you can fund the business for your kids at that point, really starting to secure generational wealth. I've seen families have access to this and be able to really create that, not just for themselves but for their children and their family members. The other part that is a little bit more conservative that I also just wanted you guys to see, just for transparency, because this is what the older ways of doing infinite banking was the whole life plans, because the universal life ones are a little bit more aggressive. It's a little bit more up and down in the market, but people that just say like, hey, I love this concept. I'm just a little bit anxious about the stock market. I'm a little bit anxious about investments. I just want this 6%. So to kind of show you guys what that looks like, same $500 paid over 20 years, but contributions have made over 20 years. We start to kind of do that up until age 55. By the time that we get here at a certain age, this is where you would want to look at the values. This is the values that you can access here. Everything else is just, the death benefit. There is quite a big difference in terms of death benefit, but these are for a lot of families that are conservative. They don't really necessarily care about the death benefit so much. They just want to have access to that uninterrupted compounding growth. I see a lot of, for some reason, a lot of my older Asian clients tend to, even if I show them universal life and whole life, they tend to gravitate towards this more just because it's safe. It's super safe. You never risk losing anything. You continue to just compound that wealth. So this is another example of that. You kind of get to have that, and we show that to a lot of
Yeah.
families where
And
we
and you
show
hit
them
you
this.
hit it on the nail. The term generational wealth. It gets thrown around a lot, especially on social media these days. But and a lot of people are also, exposed to, insurance products. We've been sold, my parents were sold life insurance, and I saw that as a kid in my early age, and people talk about life insurance, but a lot of people don't understand when used properly and designed properly, it becomes a huge asset and a huge tool that can build real generational wealth. So what you guys are looking at, if you guys have seen life insurance products in the past or have been sold life insurance, this is not your parents' life insurance policy. All right. This is taking life insurance, as we all know, and using that as a tool now. So this design of cash value and death benefits. So most insurance products that you've seen in the past, they were designed for you to have death benefits, right? It was designed so that when you pass, you have this bunch of money that gets paid out by the insurance company to pay off your house, to pay off, inheritance, things like that. What's designed differently here is that there is actually cash value, meaning living benefits. So in insurance, there's death benefits and there's also living benefits. Now, how this is designed and structured is that it's designed in a way so that you have access to living benefits and as well death benefits. Now, the death benefits, I don't know if you guys caught this earlier. So, when you have money building and growing inside, when you're pulling money out, you're actually borrowing against the policy. So, like the example earlier at year 15, where you had $110,000, and let's say you want $80,000 of that, you're actually borrowing against yourself. And this is why it's called infinite banking or being your own bank. You are actually funding yourself and now lending yourself out from your policy. right? Your policy now becomes an asset. It becomes a collateral for you to borrow against. Now, what's really cool about this is that when you borrow against your policy, you actually don't have to pay that money back because your death benefits, and we're all going to die one day, your death benefit is there. And if you look at these death benefit numbers, 200,000, 300,000, these figures are really big because anything that you borrow against it, when you pass, that money goes off and pays that off. So the money that you borrowed against your policy, you never have to repay because you have death benefits that come in and just take care of that when you pass. So very, very powerful stuff, meaning you're able to now to use your money when you're alive. You're able to take that money and let's say invest it in real estate, create cash flow, investments, and now pass on also an inheritance to if you guys choose to have kids or do already have kids, this is a powerful vehicle. So this is not your parents or grandparents' life insurance policy. We're not here to sell you guys on life insurance or anything. We're here to take the life insurance, I guess, system or design it in a way so that we have leverage, right? We talk about leverage inside our community all the time, right? With Enagic, we leverage the financing company so that we make small payments towards our products. We get huge ticket items, payments that come in. We get paid huge commissions from people making small payments every single month. So just like this concept here, instead of putting big money out or having to save a big amount of money towards, a house or anything like that, you're making small payments each and every month, each and every week, whatever that might be, whatever is comfortable for you. But over time, that compounds with the market, whether you want to go aggressive with the universal option, which Jasmine was saying can go up to 10 or even 12% per year. Or if you want to stay conservative with the whole life, a lot of people love this whole life concept just for the pure steady growth, right? So if you're not a person that likes to take risks or wants to be that aggressive, go with the whole life. I think it's a really great concept as well. Steady growth over time. And then whenever you want access to that money, you're borrowing against it. The money still grows on your behalf. You never have to pay the amount that you borrow because your death benefits pays for that when you pass. So I just wanted to kind of summarize for people so
No.
that people get a clear understanding about it.
AJ, you had said something that was really important. Whenever we actually put these plans together, I feel like the life insurance part is the last part of it. It's just more of that bonus of, hey, by the way, there's also an inheritance you can leave to your kids. It's not even an investment per se, like specifically, it's more a cash flow strategy. It's ensuring at a certain point that, hey, we've always heard lines that an average millionaire have 7 streams of income, right? So it's really being able to, okay, well, how do I do that if, let's say, for example, I make $100,000 this month, $200,000 over this next year, which this opportunity, AJ, your opportunity is able to do, right? If I'm able to do that, how do I secure that as I make a lot of money, this could lead and my retirement is taken care of. I can buy assets 5, 10 years from now. And I think which is why it's so powerful in your community, because as you help them make money, you also, that second stage, I always tell family this whenever I show the infinite banking concept. um I obviously always want people to kind of sit down with us, but even if it's not with us, just do it. Just do it with someone, because it's one of the biggest tools that can really help us just get ahead, right? And then I'll just kind of finish off with some of the examples for you guys, and then if you guys have any questions, then we can open that up. But just two solutions of examples to kind of
Yeah, if
show
you
you.
And if you guys love what you see, put a 7 in the chat. I know, for some of you guys, this is new. You guys have never seen anything like this. Maybe you have seen, life insurance in the past and, you're like, it's just life insurance. But if this is something that excites you and you think it's powerful, put a 7 in the chat because, like I said, when I first saw this myself, it was like, a light bulb went off, but I was like, at the same time, there was so many numbers. It was so confusing. Nobody was able to explain it to me in full clarity and transparency. And this is why I really love what Jasmine does. She breaks it down so easily. It's so easy to understand, and it's so easy to really grasp this concept. Sorry to interrupt you there.
No. All good. I think that I think it's so important for us to be able to kind of do this. But just wanted to show you a couple of examples of what it looks like, in the future and really how it changes your asset class. How do you now have $1 million more in retirement or inheritance for your kids? This is just a quick example for people that just say like, hey, I just want to see numbers, what that actually looks like. If I was to invest it somewhere else and what would it look like here? Just showing you what the estate value is at the time of retirement, with the inheritance for the kids, some of the savings that you guys have. And this money that you see over here, if you guys can see that, that's money that you can access and then can transfer over to your next generation. If you see it on this other side, there's nothing, but it's the exact same $30,000 a year that you're putting away, right? So the exact same money, completely different um, end result. So here's another one, the difference in retirement and actually accessing it in retirement. The first one for John that just put it in a savings account, registered account, earning both the same amount of interest rate. At one is at 7% actually for John, and the one for Bill is at 6% in the dividends. Why the difference? Looking at the dividends and the difference that you guys have here, John has about almost half of what they can take from Bill. So in retirement age, if you're going to be taking money out, it's such a huge difference as well. The reason why John's is less is because as he takes more money out, he takes money away from inheritance for his next generation too. This way, you can use up all of the money that's in the account and still leave an inheritance for your children. And I'll just wrap up with some examples of people that have used it. You're like, hey, Jasmine, does it actually work? Corporations have used it, families have used it. If you guys are familiar with Walt Disney, how infinite banking concept was used was obviously no one wanted to believe something like a Mickey Mouse would work and a Disney World will work. So no one wanted to give him the loans for it. So he borrowed against his life insurance policy. And then he used that to open Walt Disney as to what it is called now, Walt Disney. A couple of other companies, J.C. Penney, also used it during the Great Depression. They used it as their line of credit instead of borrowing. Obviously, when companies are going under, no company would lend them money. So they borrowed against their life insurance and kept their payroll afloat, their business afloat, at least at that time. Right. This shows the whole life policy serves as an emergency line of credit in tough times. McDonald's, as you know it today, McDonald's also was the first ever franchise of fast food. Fast food was never a concept before McDonald's. So for institutions and financial institutions to fund it, they didn't want to take that risk. So what Ray Kroc did in the early days of McDonald's was to be able to get some money from his life insurance policy and fund the early stages of the business growth. Imagine if he didn't have access to that money, what would McDonald's even exist today? A couple of other ones is Doris Christopher, Pampered Chef. She's a life insurance to loan to start the company from her basement. So this is when I always tell people like it doesn't have to be these great big things, but Pampered Chef was just delivery for food, right? So really being able to have now what it is today. And just a side note, they were actually able to sell Pampered Chef for $1 billion when they sold it to Warren Buffett a few years back, right? Family owned businesses and real estate investors use it all the time. Many private businesses, real estate investors use it to fund their expansion, buying equipment and properties, paying staff, and then to finance buy and sell agreements for succession planning. And you know what? It's also these companies, the infinite banking principles was named as such because companies can benefit by gaining access to capital without banks, creating tax advantage, private banking system, building multi-generational wealth. But lastly, a quick story about how really this truly has made a difference. There's two families that you guys are probably familiar with, the Rockefellers and the Vanderbilts. Back in the 1800s, this was their net worth. The Rockefellers and the Vanderbilts. The Vanderbilts were actually about way ahead in terms of net worth. They were about $185 billion in net worth. John D. Rockefeller, on the other hand, was about 25 to $30 billion of net worth. This was in the 1800s, so it's a lot of money at that point still. But two different families did two different things. The Vanderbilts today, the Rockefellers is actually who popularized the infinite banking concept. They were called the Rockefeller waterfall method, where they now really started from one small one and then they kind of grew and grew and grew over time. But I want to show you what that looks like today. This is a family tree of the Rockefellers, and why I show you this is exactly because of here. Now, this is the Vanderbilts. By the time, if you guys are familiar with a reporter or a broadcaster, what is he called? A newscaster? Anderson Cooper.
Yeah.
You guys are familiar with him. He's actually at the time, as of 2019, the last Vanderbilt, before Anderson Cooper. The estate that was transferred to Anderson Cooper was actually just $1.5 million. That was it. From all of the wealth, they've spent fortunes and fortunes as they kind of done that. 120 descendants were millionaires. You can kind of see this in some of actually ChatGPT will help you with this. Their estate was passed over 1 million. Anderson Cooper is worth about $200 million today, but nothing through the wealth of their family. However, I want to show you what the Rockefellers look like. The Rockefeller family has about 200 heirs. Almost all of the heirs in this family have a net worth as of early 2024 of range of 10 billion to 10.3 billion dollars because of the concept of really truly just infinite banking. They manage your wealth through irrevocable trust. This is just an upgraded version of an infinite banking now when we're working with millions of dollars and generations of generations. And actually, to tell you the truth, a lot of the Rockefellers just work in philanthropy now. It's like money doesn't exist in that world anymore because they will never run out as they set it up. So I just wanted to kind of finish up with that. Probably one of my most favorite, the reasons why I'm in this industry, one of the biggest reason why I'm in this industry. Also really excited to always build wealth for families, because I used to think that creating wealth and keeping that is something that I need to either win the lottery or work two jobs or just be able to have, an excessive amount of either sales or something like that. But now I realize that not coupled with the right platform, which you guys have, AJ, coupled with the right platform and right strategies, I can, in a matter of year or two, completely change my generations for generations to come and really truly my life. And I'm excited when we kind of talked about this, and I'll just stop my share here. Oh, this is a QR code. If you guys have any questions, that's just for you to kind of send some of the information. I'll just kind of send us some of your information so then we always would send like free information to you guys about it, because I would always tell people that I'm also the first one to tell you that this is not a good fit. There are things that maybe you need to take care of first before we look in infinite banking. I'm a wealth strategist and a financial advisor, so there's a lot of different things that I do, but of all of the tools that are available in the market, this is my most favorite one. It has changed a lot of people's lives and continue to do so. So that's about it, AJ. I think I always think that infinite banking concept is a lot more complicated than it is, but really it's as simple as that. The only I'll just leave it this too as well. The only caveat to it is families that need to apply to it, because it is a life insurance plan, you need to be healthy. So it's not something that I tell if you're thinking about it, just at least put something together, because if your health changes, it makes it so difficult for us to set this up. Because the reason why it works is because insurance companies bank on you're going to live a little bit longer than 10 years, 15 years. That's really what that is. So, yeah, and I'll leave it to you, AJ, if you have questions or anything like that.
No, thank you very much. You've been amazing. One thing that I did want to bring up, and it didn't click until you brought up the slides on the Vanderbilts and things like that, is that we're all obviously, a lot of you guys that are on here, you guys probably still have your jobs, but eventually you're gonna move into entrepreneurship fully, right? Once this takes off for you guys are making 20, 30, 100K a month, this becomes your full time. Now, when you're a full-time entrepreneur, because you don't have a paycheck. Accessing wealth, accessing leverage in the traditional financial world, like the banks and things like that, can be very tough because you don't have a steady paycheck. So they look at entrepreneurship as high risk. What we do is very high risk. So being able to buy a house, getting a mortgage, things like that, I know firsthand because, I've been down that road many times. Now, with something like this, and this is why we call it infinite banking, but not only that, you are really becoming your own bank, right? When you become your own bank, you're taking literally your whole finances, your whole wealth generation into your own hands. See, you have full control now of your wealth, right? You don't need the traditional banks. You don't need to go beg them. You don't need your credit score. You don't need anything to be able to access wealth. So yeah, that really clicked for me. And this becomes a legacy, right? We talk about legacy. Andrew's team is called the Legacy Project within our community here. So, think long term. I want to invite you guys to start doing that. For you guys catching the replays, I know there's going to be many more that couldn't jump on this call, but for you guys that are watching this on a replay, think long term, think legacy, right? Because it's great to be making money now, right? Making 10, 20, 30 grand, 100 grand a month. You're excited, you spend that money, you're traveling, you're buying nice, shiny things, which is really amazing. I truly believe in rewarding yourself. But what you do with your money today can set you up for the rest of your life. So I want to leave you guys with that. If you guys have any quick questions, throw it in the chat. We'll get to those questions quickly here. I do want to keep this call within under the hour, just so
Yeah.
that people watching
You're
this
saying
replay can digest it.
you're saying, AJ, that you like spending money. Me too. It's actually why I set it up. It's I never want to run out of money to spend.
No, it's very true, right? Because active income, there's many ways to create income. And a lot of people, once you dive into this world of entrepreneurship, and you talked about how the average entrepreneur or the average business or millionaire has 7 sources of income. Now, those sources of income aren't all active incomes. Even with what we do with Enagic and things like that, it's a more active type income because you're putting in work to create commissions that come in. With this, it's passive because it's sitting in the background while you're actively working on your business, whatever it might be. On the back end, you're just putting money aside as you would in traditional bank. So when you look at banking products, what are they giving you? 0.5, 1%, tops 3% per year. And that's all you're getting, if you're even getting that. Now, in a sense, with the banks, when you put money in there, let's say, you want to buy something shiny, tomorrow you can pull all that money out, right? There's no discipline there. With this, what's really cool is that you're on a weekly or you're on a monthly payment system where you're really putting money aside, creating discipline for yourself, and that money keeps compounding and growing. Every dollar that you put into this system now compounds and grows right away when you put it in. So I want to leave you guys with that. It looks like there's no
Yeah.
questions, so which is really
Yeah.
amazing. That means you did a really good job explaining, which
Thanks,
is really
AJ.
nice.
You can always reach me. You know my number, and Instagram too, right? So any questions that you guys might have, you can always message me there. I think for me, it's always just that the most important is to be able to answer people's questions, and also to set it up properly. So, but yeah, good luck, everyone. I'm excited to watch your journey. I'm always like watching all of you guys. I'm like, who's making more money now? Who hit 100,000 this month? So, but yeah,
No worries. Thank you
bye.
everybody for joining us. So yeah, that's the end of the call. And any questions? I'm gonna probably create a straight channel of some sort. Maybe we'll put it in our Telegram group, direct contact to reach out to you. Maybe better through Instagram or socials or things like that.
Yeah, I'll send it to you. I'll send you the QR code too, just because so they can type their questions there too. It goes directly to my assistant, so they can get to like just a faster response. If it's just like a quick like, hey, this is me. I just want to know if this is a good fit. Like quick 10-minute call. Yeah,
Awesome. Thank you
yeah.
very much, Jasmine.
Bye,
I
AJ.
appreciate you
Thank
guys. I
you.
appreciate you guys for all jumping on. I know, it's an evening, taking time out of your evening to take a look at this information. Really appreciate you all. And maybe we'll do more of these calls, just as educational for people to, really expand their mind and really grasp this concept. So thank you very much. Hope you guys all
Have
have
fun
a
in
great
Vegas.
evening, and I'll see you guys on the next one.